Are you looking for a no-nonsense, to the point weekly market update covered in one short video? Then this is the video for you. In this video, I'm going to be covering what happened this week commencing 24th of April, and we're going to be covering things like the earnings continuation, Q1's GDP report, Fed expectations, and a lot more. And of course, to finish, a quick weekly close summary of the most impacted markets. So without further ado, let's get into it. Now, of course, as always, please pause the video and understand everything that I say here. None of this is financial advice, of course. It's just my personal thoughts, opinions, and experiences. If you are looking for financial advice, please seek a professional to do so. So let's kick it off, and we'll get started with the continuation of earnings season. Throughout this week, there were weekly market earnings, and overall the market reacted fairly positively. Okay, the S&P 500 had a return of about 0.8%, with some good reports from Meta as well. Although Amazon's report was slightly disappointing, the tech stocks performed generally well, led by mega caps such as Amazon, Google, Apple, and Netflix. It appears that investing in these quality companies is a safe trade for those who are uncertain about the market. One reason for this uncertainty is, of course, due to the issues with banks that we've been seeing, especially lately, and especially with First Republic, which it looks like it will be taken over by the FDIC. Now, this is the third bank to be taken over in just 2 months, causing concern amongst investors. However, despite these concerns, companies were able to weather the storm of the March banking worries pretty well, and the market remained up in the week due to positive earnings reports. So let's move on to economic news, and let me switch my screen. There we go. And we can see here, this is the weekly, this is the week, of course, commencing April 24th, as we were saying, so basically the whole of last week. And we're going to be talking about a few things here that made a big impact into the markets anyway, from my point of view. And of course, the first thing, although not massive, it was something to keep an eye on. It was the new home sales reports. And the new home sales reports for March exceeded expectations at 683,000. Compared to the 633,000. So these numbers are up as a whole. However, we did see pending home sales fall short of expectations. This could be because of a shortage of existing homes on the market, leading to increased sales of new homes. However, overall pending home sales are declining due to the lack of inventory of existing homes. Additionally, and I'll say more importantly, is this one here, the advanced GDP quarter. Okay, this is the prelim report, and this report is updated monthly, okay, until the final report is released. So do keep that in mind. This is why it's the prelim report. Now, this report came in below expectations, right? Vastly below expectations. They were expecting 2%, and we saw 1.1%, and this is coming off of the back of Q4, which was 2.6%, right? So this is showing a drastic drop of 1.5%, indicating a notable decrease in the overall economy, all right? And this is something that we've been expecting, and something that is just cementing what is to come. So, you know, it's going to be important to monitor how this GDP report is going to be developing over the coming month. And just a quick note on that. This is a good point for me to interject and let you know to follow my socials, including Instagram and TikTok. Yes, I'm on Instagram as well. I am trying out a few things, and you can find my links, of course, on my link page, okay, which is this here. It's down below in the description box as always, but I've also added a website here, as you can see as well. My link page will be right there, as well as, of course, on the header of the page there. All my socials are up here on the top right, and of course down at the bottom. Now, why do I mention that? Because, well, before the GDP report was to be announced, about an hour before, I did let everyone know that was on my Twitter, on my socials, that report was coming out, and to basically let you know, if you were in trades, to be careful. If you can take profits, bank those profits, get them in. And as you can see, I've got it actually here on my Twitter, which was the post report. And all this is going to do is just basically give you more up to date, you know, as it happens, when these kind of things are happening, just to remind you, if you're not really conscious of what's going on, especially with data being released, you know, if you are trading, to avoid things, because especially like that, we did see, you know, volatility, especially in NASDAQ. So yeah, just a quick point there. If you are following my socials, or if you're not following my socials, go and do that for more up to date points. Anyway, on Friday, we did see the, where is it here now? Okay, the PCE, the personal consumption expenditure, all right, the PCE report, which is the Federal Reserve's, or one of the Federal Reserve's preferred measures of inflation. And this came in slightly higher than expected. However, it wasn't significantly higher. Didn't really do much at all. So all eyes will be on the Federal Reserve's meeting next week. And it's something important to keep an eye on next week. We're going to be talking about that in a little while, where they're going to be deciding on interest rates. The market believes right now there is about an 88% chance. I don't know if that figure's gone up or down a little bit here and there. But they will be raising, that's the 88% chance of that they will be raising interest rate by another 25 basis points. So we need to monitor that decision, how that decision will impact the markets. The most critical factor here will be, of course, Fed Chair Powell's rhetoric during his press conference on Wednesday, which will more likely move the markets depending on what he says and how he says it. Now, I'm considering actually going live for that. Let me know in the comments below if that's something that you would like to see. I'll be bringing up the live conference on mute, and I'll be talking about how the market's moving at that point. So that was last week. Let's have a very quick brief view of the markets, generally how they performed. You can see that the Dow increased by about 0.86%. The S&P 500 rose slightly by about 0.87%. And the NASDAQ did pretty well by going up by about 1.3% on the week. Now, looking at oil, we can see it did decrease by about 1.6% to about $77 per barrel. And, you know, despite this, many people may find it hard to believe, especially due to the continuously rising gas prices. But looking back at this, remember that gap that I was talking about on my last week update? Well, there we go. We filled it right there. It was something that I was calling for a while, and I got in some good oil shorts down there as well. Now, moving over to the US government bonds 10-year yield, we did see the rate drop to 3.4%. And that's pretty much basically because the bond market predicts that despite the Federal Reserve's decision to raise interest rates next week, they will have to lower them by the end of the year. However, the Federal Reserve disagrees with this prediction, so it will be interesting to see who ends up being right. Like a soap opera. Additionally, gold, very quickly actually, just off the top of my tongue there, gold did go up by about 0.35% as well to $1,989, just over per ounce. So that's pretty much the markets in general. Very, very brief overcap there. Now I'm going to be moving over to my main screen here. There we go, because I'm going to be putting some of these shots in post-production. But basically, as mentioned earlier, many major companies announced their earnings this week. All right, let's take a look at some popular stocks and how they fared. Meta reported earnings that exceeded expectations, and their stock increased by 12.9% to trade at $240 per share. Google's stock rose 2.2% as well, to about $108 per share after they also reported better than expected earnings. But on the other hand, Amazon stock decreased by 1.4% to about $105 per share due to their earnings report. All right, although their earnings were fairly decent, their cloud service didn't perform as well as expected, which is a significant part of their business. You have to understand that since Amazon has many business sectors, as we know, the AWS cloud business slowdown in growth caused investors to sell off the stock throughout the week. Finally, let's move over back to my screen actually. Let's go to Bitcoin and see how Bitcoin is faring. Now, we saw Bitcoin also, just like the NASDAQ actually, it replicated it fairly well. Bitcoin increased by over 6%, 6.2% or something thereabouts. And it's currently trading at $29,267 as of this moment. It appears that it's had a similar rise, as I just said, as the other major tech stocks, as we attempt to navigate through uncertain times. All right, and it's important to see how the banking problems are going to be impacting the economy, and are we going to see Bitcoin, you know, really do what it was made to do, which is be a hedge against inflation. It's important to see how we're going to hit that. Are we going to hit that 30K mark? That's going to be, of course, a big psychological level, but I'm not going to go into any analysis on Bitcoin too specifically, because I want to keep this video short and concise. Now, before we finish off, I do want to mention what is going on very quickly next week, what to look out for. And as you can see, on Monday, we've got, PMI to look out for. We do have CPI for euros, not important. Jobs opening, the jobs on Tuesday. But Wednesday is where the action's really going to take place. So we've got, of course, 9 p.m. GMT +3, so work that out in your own time zone. We've got the FOMC statement, like we said about the interest rates. Are we going to see that 25 basis point hike? And of course the press conference. Now the press conference is where we're going to see a lot of volatility as well. And again, just another reminder, if you want me to cover it live, hit the comments below. It'll be important to see if you guys are up for that. If not, I'm not going to worry about it too much. Thursday, unemployment claims, policy statement, ECB press conference for those in euro. And of course, on Friday, being the first Friday of every month, we do have the non-farm employment change, okay, the NFP report. Something else important that I might actually do a dedicated video on as well. But that's pretty much next week. So Wednesday and Friday are big days. And Tuesday and Thursday, if you are trading, try to avoid trading, especially on the second half of the day for Wednesday, anywhere near the Fed Reserve. If you're not an experienced trader, try to avoid trading anywhere around that sort of time. Let the dust settle, and once you've got the narrative, once you know what's going on with the markets, then you can safely say, all right, so it's a bit safer to trade, because you'll have a better idea of where the market's going. Anyway, with that out of the way, this has been your weekly market update. As you may have noticed, I have condensed it pretty much, okay, to keep these weekly recaps shorter. All right, I want to keep the video shorter, as that should be enough to get you through what basically happened this week, and what, how you can plan your trading and your investing for next week. If you do have any questions or any requests for stock updates or whatever, feel free to comment in the section below this video, and don't forget to subscribe, like, and hit that notification bell so you're constantly up to date with any videos that I may be putting out. I'm going to try and amp my video production next week as well. So with all that being said, hope you enjoyed this video, hope you're having a great weekend, and I'll catch you guys on the next one.